Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at a lovely W3 or Wave 3 trade setup that unfolded on a short-term chart of the BankNifty over there in India. But as usual, we have to look at our risk disclaimer and remind you that all examples in this video should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing, or put another way, all professional traders know and understand, but more importantly accept, that losses can and do unfold no matter what trading approach you take. Right, this is the chart we're looking at today. It's actually a 3-minute chart of the BankNifty, so I want to have a close look at our W3 or Wave 3 trade setup that unfolded here a bit earlier in the day. For those of you who follow MTPredictor regularly will know that we teach that the markets basically go in cycles, where about half the time, or just over 50% of the time, the markets are random. In other words, you can't be doing any kind of analysis because the market pattern is unclear, and then the other half of the time the pattern becomes clearer. So obviously the question arises, how do we decide when there's a clear pattern? Well, for this we use a multi-time frame approach, where you go to a time frame between 3 and 5 time frames higher than the one you're trading on to then get the larger degree trend. So if you're on a daily chart, you go to the weekly. If you say on a 15-minute chart, you go to the hourly. As I'm on a 3-minute chart here, I'd go out to the 15-minute. Now for this, you go back to previous pivots. If I use our trading mode here, if I jump back to halfway through the previous day, you can see we had a previous pivot high here. So I right mouse click, I do decision point. Can you see how that's on the chart in advance? In other words, before the market gets there, that gives you an area of potential resistance. If I turn trading mode off, you can see how it went up into that high just towards before the end of the previous day, and also is still in that area. Do you see that there? Still in that area just as earlier today the market opened and went up into that zone. If I now come down to the 3-minute chart, you can see how this looks. Here it is. Here's our resistance at our 15-minute DP resistance area. We can also take a DP off this prior pivot high here. Actually, I'll just show you that just before even today even opened. So I'll just use our training mode again. And I'll jump back to before today even opened. There it is. So there's the previous pivot high. You right mouse click, decision point. That's an area of potential resistance because it's above the market. So that was on the chart before today even opened. So we turn training mode off, and then look what happened. The market went up, it went up, and just look where the high of the day came in. Whoops, if I can drag that across. Came in right at that level there. So that was the first potential trade of the day because it was a DP sell at our resistance with our MTP trend red. So that was the first trade of the day that came down to this level. She may well have been in a short trade already before this W3 trade setup came in, but this is the one I really want to look at because a W3 trade setup is a nice trade setup. Why? Because if you look at our major swings, a W3 trade setup is a, if I do our Elliott Wave minor there, sorry, I should have done the other way around. It's an ABC correction into a Wave 2 to then trade the Wave 3. Now the Wave 3 is typically the strongest and longest in the completed 5-wave sequence, therefore is one of the best trades to take in the Elliott Wave sequence. So this was a good trade setup because the market was coming in at higher time frame resistance before, so that's where we start our Elliott Wave pattern. That's why we use our Elliott Waves in isolation, because as you remember, markets are random half the time, therefore half the time Elliott Wave patterns are just unclear. Therefore, only half the time we work with the Elliott Wave pattern. Sorry, I had a bit of a cough there, so I've just had a drink. So the market came down in a potential Wave 1. We start our sequence here. It then corrected up into this trade setup here. So we right mouse click on the red sell bar to analysis. That gives you your position sizing based on a 2% risk on your account. You can set up different account sizes you wish as well. So the trade is into the typical Wave 3 WPT because this is our initial target for a potential Wave 3 swing. As you can see, the market came down very nicely excuse me, and hit that target before starting to rally back up. The result was a nice profit, but not just in rupees, but in risk-reward ratio. In other words, the profit was 5.8, or just slightly less than 6 times the initial risk. In other words, when your losing trades come through, there'll be a 1R or minus 1R loss, but this profit was 5.8, or between 5.5 and 6 times the losing trades or the initial risk. And as you can see, it was a good trade to take, with our MTP trend red at the time, coming off a higher time frame resistance earlier in the day, down into the typical Wave 3 WPT. So good example of our W3 or Wave 3 trade setup unfolding on a short-term chart of the Bank Nifty earlier today.